Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for October 19th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Looking at the daily time frame here, basically, again, we're stuck in the range. We've talked about it before. Impulse move here is going to set the range for the election. We've only got here a couple of more weeks until we come to election time. So the expectation is that we're going to continue to trade in this range. We've seen buyers come in off these lows. We've seen a bit of an absorption signature develop here off of 2120. You see bears up here have been defending prices between 2140 and 2144s, 2145s. So I would say there's buy stops above 2145s here that could get triggered for a move back towards 68 to 70. But up here, this is where bears have come in and defended. So the idea right now is continued range type of behavior. Doesn't make for the best swing trading at the moment, but there are moves to be had. If we look at the intraday time frame right now, we had, even in the previous session, there were some great moves to be had. Despite the overnight rally here, one level we were watching intraday was 29 to 30 for a buy opportunity right here near S3, and that was taken by our room. Up here, before we got off the call, the expectation was between 2138 and 2140 is an area to defend for a return back to value and across the range, and you see that played out. So there are definitely moves to be had here intraday, but you have to be very selective, very careful, because this is a market where the volatility drops suddenly then picks back up. You do not want to be trading a low volatility state in this market at the moment. What we see right here so far today is a rejection down here near the previous week's close price. Price rallied back above the previous session's close price, and we're now testing 2135 quarter from below, which is the September 21st FOMC key level. So right now we're seeing resistance here. The expectation after this rejection is perhaps the next pullback could be a buying opportunity for an attempt to push above 35s and into 38 to 40. Remember, if prices can get above 45s, it could squeeze on a swing basis. So there could be a little bit more upside here into 40 and maybe a little bit higher. But again, if prices can't hold above this previous week's close of 26, you likely auction back toward 19 to 20. Let's take a look at crude oil. Here's crude. Let's bring up the daily time frame here. What you'll notice in crude is we've been sitting up here near these highs for some time now. Right between 50 half and 51.67, we've seen prior rejection before, and we're in that range right now. 49 up to about 51, 52. That's a zone right now. That's the zone where the market is currently trading. And what I mentioned before is if price cannot establish acceptance above 52 soon, you could be looking at a move right back toward value down here between 45.60 and 46.69. And so right now, basically, there could be some sort of channel developing in this manner. Any failure to get any acceptance up here runs the stops right back down here. So that's something to watch out for. Again, prices have not been able to really maintain acceptance beyond 52s ever in a while. The last time we were comfortably above 52s was July 26, 2015. So that's the last time we were above that zone. So there's clearly above 52s would be significant and could squeeze up to the next levels. But we got to continue to watch this very closely. I don't know if we will see much of a breakout ahead of the election, but anything can happen. So we got to continue to watch the levels. 52 up, 49 down. That's the range right now. And we could be fading the edges of this range short term until we see a longer term move. On an intraday basis, you can see that in the previous session here, price pulls back toward S3, bounces back up, rallies toward R3 by the end of the day. So that was a nice finish to the day after it started a little quietly. Now prices are up sitting just above the previous session's high price right here and trying to hold. If prices cannot hold above that previous close, previous high and close, that could lead to a move back across the range toward 50 half and back toward 5-day VPOC at 50.13. So right now, the zone to watch is going to be 51 to 50.10. 51 to 51.10, that's an area where bulls want to keep bid, but if they fail, you auction right back down. All right, let's take a look here at gold futures. We'll bring up a daily time frame of gold futures here. For the most part, gold seeing a little bit of a bounce here. This is what we've been talking about before, is that this party is not going to get started to the upside until 1268s start to become violated here. 1268s, that key level right here. We've held between 45 and 68 for a matter of a couple of weeks, and finally we're seeing price push through that high. And what I mentioned before, especially in the trading room, is that in gold and many of the gold sector stocks, ABX and others, GDX, those things, we're very, very tightly coiled on a 5-day range basis, and so tightly coiled that the next round of volatility is likely due very, very soon. So we had increased volatility on this period and then super decreased volatility here. Now this breakout could increase the volatility yet again and force this market back up. So right now, breaking through 68s is very important. If price can hold above 68s, this could continue and extend back toward 1290, at least on a first test basis up there, and perhaps get as high as 1306 to 1310. So this is going to be very important here to see if the continuation remains here, because above 68 is clear air back above. All right, let's take a look here at the NQ. The NQ here, basically, this one's important because right now we had this key level right here coming across. It's 48.40. We were talking about 48.40 a lot in the room yesterday. Prices got above it and then failed. It's been offered several times after price pushed right through it a couple of weeks back. And so this is an important area here. Obviously, we've been trending up. These late bulls here haven't been getting paid, and so now bears are trying to keep this area offered for a shot at dropping it again. But again, this is a difficult range right now. It's not super easy. There are some key levels to watch: 4,800, 48.40, and we have an inside day so far after yesterday's wide-ranging day, and that's something to watch here. Again, anytime price drops here and starts to get defended by bears, these bears need to start getting paid with new lows below the previous week's close. Otherwise, the stops may come out and you could be looking at a retest of 4,900 and beyond. All right, let's take a look at the intraday time frame. Here it is. So basically, what we have right now is the previous week's closes here, 48.02. You have 48.40 here. Price initially failed, then pushed up again, could not hold above the highs, and failed again. So 48.40 remains a big-time key level. So if price comes into 48.40, expect bears to attempt to trap or defend that level for a shot at pushing this thing lower. Any acceptance beyond 48.40 could lead to new highs, and that thing could extend even a little higher. So right now, 48.40 is a key level to watch on top, 4,800 on bottom. Watch that little range as we progress throughout the session. But because we have such a narrow day so far, after yesterday's wide-ranging day, we could test both sides of this range. That means go up a little bit, go down a little bit, and test both sides of the range before some directional conviction is seen. So look for this range to continue to expand and develop. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.